Hi guys, guten Tag. Welcome to the How I Raised It podcast, the show where we get an inside look at how real founders raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Sebastian Baier of Buynomics out of Cologne, Germany. We talk about how to define and build in a new white space category, the German and European startup and fundraising scenes, tips for due diligence, and more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. It's really going to help you get ready to raise money. To get instant access to this, please click the link in the first comment. And while you're there, please leave us a nice comment, what you like about this episode or this series in general. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Sebastian.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Sebastian Baier of Buynomics coming to us from Cologne, Germany. How's your day going?
Everything great. Thanks for having me, Nathan.
Good. Are you a native of Cologne or where are you from originally?
No, I'm actually from southern Germany, close to Stuttgart, like you might know from the Mercedes, Porsche, very industrial region. Basically moved here for my wife, and luckily I did, because otherwise we wouldn't have founded Buynomics, because like kind of met my co-founder here, and it's one of those tiny coincidences.
I like how life works out like that in many cases, right? Well, cool. Well, let's go straight to it. What is Buynomics? What do you guys do?
Buynomics is like, our vision is to build an operating system for revenue management. So what does this mean? This means it's a SaaS solution that enables large companies in the consumer goods, telco, and software space. At the moment, companies like Danone, for example, or the likes, to make better decisions on basically all their aspects of revenue management. So what this means is, which product should I offer, which prices should I charge, which promotion should I run, how should I react to changing costs during inflation, etc., etc. So basically, this is what we do, and this is based on a technology we have developed, which we call virtual customers or virtual shoppers. So basically, you can think of it like we take our clients' data, transform it into virtual customers. Virtual customers is like a marketing term for a statistical model of customer behavior, but basically it takes the data, produces tens of thousands of virtual customers, and those tens of thousands of virtual customers make decisions extremely close to real customers, how real customers would. And basically you can change your offer and see live how virtual customers and therefore real customers would react. And since virtual customers are virtual, and in the end it's just matrix multiplication, you can literally show them millions of different offers within seconds and let the algorithm search for the best option. And basically that's what we do.
Interesting. Do you need to create these virtual customers? Very interesting concept. Do you need a lot of historical data or a large quantity of real customer data to be able to create the virtual customers?
Yeah, exactly. So basically, I mean, we almost always use historical data, which our clients already have. So in general, since we're working with, at the moment, really big enterprise customers, they typically have many years of historical data. And basically, and that can be our data sources. We also can include or combine like data from questionnaires, conjoint data, et cetera, et cetera. So virtual customers, you can also think of it like a standardized way to measure customer reaction. And since it's standardized, you can use established methods like Bayesian updating, et cetera, to combine them, right? So you have measured it one way, you have measured it the other way, and now you can combine it and come up with something more precise. But very often we just work on historical data our clients already have. And we also find this like much more accurate, because in historical data, people have voted with their money, which is typically much more honest than when you ask them.
Yeah. That's a good point. Very interesting. And what size firm do you need to be? And I'm thinking, and I'll give you a little case study of one single instance. We're launching a new product. It's going to be, I'll give the plug here. It's going to be called Funding Stack. It's going to be aimed at VCs and investment bankers and others. And we have to figure out pricing. And frankly, we're kind of I'm just coming up with a number off of my head.
And you're the best company there. So I can assure you, like, some of the biggest companies do it exactly that way. But sorry, go ahead.
Yeah, no, but that's it. It's like, I mean, we have done a few little polls or surveys, but like you say, I don't necessarily trust them. Like, we've done surveys where we ask people, here's what the product, how much would you pay? And one of my chief revenue officer guy said, oh, the customers want to pay $150. And I said, well, okay, but I want to pay $20,000 for a Tesla, but I would pay $80,000, or what I mean? Like I don't know, I don't trust that data. Even if the customer says what they want to pay, I don't trust that data because that's different. So anyway, there isn't really a question here, but I guess how much historical data do you need to be able to plug it into your algorithms?
I mean, it depends. The easy answer, of course, is always like the more the better. But coming back to your example, I think that perhaps let me take one thing, right? And this is a typical thing that we do. So you say the customer is willing to pay 20,000, and then the right question is which customer, right? So because like it's like saying like the average man is like 6'1". Okay, but how does this help? So in the end, it's a distribution. So how would someone who like only produces shirts for a 6'1" man? So that would be very simplistic. So in reality, everything follows distributions, and so does like valuation of products, or more precise, product attributes. And this is what the algorithm does. It takes basically it takes the product, dissects it into product attributes, finds out the distribution of willingness to pay over people, and then you can combine it dynamically to find out the right pricing, etc. Yeah. And coming back to your question, so we can, I mean, the question always is like, how much better are we compared to the alternative? Because what you said is just guessing, right? So in the beginning, the models, I say, let's take your example, you have zero data. So, but you have an opinion and you have some gut feeling. So what we could do is basically parameterize a first version of the model based on a questionnaire, which is just gut feeling. Of course, this is based on like your opinion or your team's opinions, but then it already has the right dynamics in, because this comes with the model itself. Because like you have stuff like you increase the price of product A, people switch to product B, and some go away. So this dynamics is always right. And then, of course, you can constantly update. So after some months, you have real data, then you update the model. And as I said, it's a standardized way to measure reality. So basically, you can take the new data, update the model, and learn more and more, and get better and better over time. So make iterative, better decisions.
Okay, makes sense. So what's the quick backstory? How did you come up with this idea? What were you doing before?
So basically, both my co-founder and me were both consultants in a field, so in a German consultancy called Simon Kutscher. It's very specialized in revenue management. I think it's globally also at the moment. But I mean, we worked like many years in the field and basically saw all the challenges. So I think one of the things is you have to have seen this in real life, because if you have like, I don't know, 5 geniuses sitting in an MIT room and brainstorming what they can find, they wouldn't come up with that, because you have to have seen this from real life experience. And the other thing, I think we both have technical background. So I have a PhD in physics. My co-founder has a degree in math. And if you combine those two things and like have like some, I would say, scientific rigor in thinking about things, and look how this key problem of revenue management, which always is how will the customer react, is approached today. And this is very often just guesswork and very, very rough estimations. This is very uncomfortable. So, and therefore we basically felt that pain and thought about how can this be improved. And it's clear that the solution needs to be far beyond MS Office, so basically far beyond Excel, and therefore far beyond consulting. And therefore we developed this concept and built a company around that.
Yeah, interesting. Very cool. I guess the only company I've heard of that's even maybe in the same category, maybe they're not, is like Zuora. Is that kind of in this? Are they doing something similar, or it's a little bit different, right? I mean,
It's somewhat different. So I mean, one thing we always said, and I'm convinced of, is basically that we define a new category. So the use cases exist. So our companies take individual use cases. We also cover like optimized pricing for FMCG, optimized promotion for FMCG. But with our holistic approach, we would always say we define a new category, which almost killed us in initial fundraisers, because this is something VCs hate, at least European VCs hate, because you add an additional layer of risk there if you say I'm defining a category.
but that's interesting. And well, I think we'll get into one of the big questions I want to get into is raising money in Europe and how that's different and stuff like that. But I feel like defining a new category is very attractive to many investors because it's if they believe in the category, of course, that's a big thing versus just another dating app or just another, iterative version of something like. Do you think it's a European mindset that they were less open about that?
I don't want to badmouth too much, but I think it's a quality mindset. So now that we got more traction and also got more discussions with really also some of the top investment firms, and I mean with Insight, I think we have a leading investment firm invested in our Series A now. But we had some very good discussions with really leading investment firms, and they pick it up much faster and are much more open to that. So because you have to, I think two things. You have to be able to like get into it and think it through from first principles. You cannot rely, like I have the impression, or I learned the hard way kind of, that a lot of VCs, they try to understand markets. Like, I don't know, the market for e-scooters, the market for Amazon resellers, I don't know, right? Food delivery. And then they try to find the best companies there. And if you say, I open up a new market, that again adds this additional complexity and additional risk. And this is something I like for my somewhat limited impression, but this is much easier with better VCs, I would say.
Yeah, it makes sense. Very interesting. Okay, let's get right to the fundraising. So how much you guys raised? And I think just one round, right? Or was there a seed round or bootstrap before that, or what?
Yeah, we had a seed round before that. Now we raised our Series A. We raised 13 million from lead investor Insight and like participation of our existing investors.
So let's start with the seed round. Talk about, you guys are two big brains, PhD, et cetera. You've got this idea, you've been working in the industry. Maybe talk about putting together that seed round. Was it friends and family? Was it people at your consulting firm, or how'd you kind of assemble that?
Yeah, basically we had a friends and family round before, then we had a seed round. So actually we had one before. So I would say in hindsight, the first one was the most difficult because like you had basically nothing, and also we had like, even though we came from industry, it's like it's at least in Germany, I guess in the US it's the same thing, but it's relatively hard if you have zero startup experience. And they discount you for that, and perhaps for a good reason that might be. So that was relatively hard. We had just 1-2 initial customers, even though relative large ones, but still no usage. And I know, I mean, that is one of the things I will always remember. We sat in Paris at a meeting with a VC fund there, and they were like, okay, but this virtual customer concept, so is someone else doing it? Has someone in the US done it? And we invented it from scratch. And then the meeting was over, right? So we thought it would be the right answer, that we came up with an original idea. What they wanted to hear is really like that we're just copying something that worked out for somebody else in the States. And this was extreme. This was much harder. Then seed round was already much more traction. So and that made it much easier to raise the money then.
And was the seed round local German angels, or talk about putting that round together? Yeah.
Yeah, it was German seed fund. Basically, this was it was LaFamiglia. It's I think a growing, pretty good German seed fund, and Seedcamp, which you might or might not know. I think Seedcamp is one of the better known or the best seed funds in Europe from London. This was the seed round. So this seed round was already much easier. Seed round, we had multiple term sheets, and we had this was much easier.
Is Seedcamp, do they have a accelerator, or it's just a fund now? I feel like they used to have an accelerator.
I'm not aware. I mean, they have this community, and they're really helpful, I would say. It's not really an accelerator, as far as I know. So we haven't taken too much of that, but they have been really helpful. But I think, I mean, for me, it's like LaFamiglia definitely has no accelerator, who led our seed round, but they helped a lot with like individual workshops, discussions. So if I would do it again, or if I would give that advice, I would always look like for the individual partner who sits on your board, you can call and who can help you. So this makes a huge difference.
Yeah, good. Interesting. Well, let's touch on the Series A then. So where was the company at when you guys decided to raise the Series A? And did you stick with Europe, Germany, or did you talk to some US investors as well? Kind of walk us through that whole process.
Yeah. So we talked with European and US investors, and with inside partners. We have a US investor leading the round in the end. I think Series A was like we raised it, or we closed it end of August, which is much tougher economic times, I would say, than the seed round before. This is something you recognized during the round. It's like I think we had a lot of very good conversations, and I think we had also a lot of traction as a company. So we had I think we checked all the boxes in terms of KPIs like ARR, growth, etc. Also cross margins, and especially I think we managed to win some really big clients, because like the business we are in is land and expand. So a lot of our growth in every given year comes from the clients we have won the year before. So that is the business model at the moment, and all of that was very positive, but. Definitely you feel that it's a different game than I think half a year before, beginning of 2022 or end of 21. So
for sure. Did you see, well, two questions, I guess. Did you see that reflected in like valuation discussions? Like, and you're hearing this especially today or a few months after when you raised, but you're hearing people, I've been talking to these investors about a $200 million valuation. Now we're really talking about $120 million. Valuation has gone far down, and then also it's taking a lot longer. Like, how long did it take you? Maybe let's start with that.
Well, actually, we went out somewhere in May, and I mean, we had the term sheet in end of June or so. So I think this is still fair. But I mean, I think two things that I would mention. One is definitely valuation. So you hear other rounds, and I think I'm not the super expert, but I feel in Europe you don't have those crazy valuations you see in the US. But still, I mean, you see companies, I don't know, below 1 million ARR, and they're like valued with like much more than 100 million. So it's like 100x valuation. Which sounds crazy, and this is definitely down. So I mean, from my opinion or from my experience, which is not necessarily a bad thing for the company health, right? So because what we see, and also I think, I mean, I'm more or less only observing that through the media and a bit through network, that there also big layoffs going on in German and European startups. And I think layoffs and the other thing is like you have stuff like the valuation, like the ESOP of your stuff is out of the money, right? So those are related problems. So therefore I think in hindsight I'm kind of happy that I haven't raised for such a crazy valuation that you cannot manage to grow into. So that's one thing, and the other thing is I would say much more due diligence. I mean, obviously it's the first Series A that I raised, so I've never done exactly the same thing before in another environment. But what I heard from others and how I experienced that, it's really, I mean, for us it's kind of fair because, as I said, our KPIs were pretty good, I would say, and we have nothing to hide. But this is it's a relatively tough due diligence. So that you're going through. I think those are the two things, and this takes more time.
That was a lot of driven by the market or just the particular investors you're talking to, or probably both. Yeah.
I think both. I mean, Inside I think is a very professional firm, so I feel like they're also doing across all stages investments, and I think they give you kind of the same treatment they would do if like the round would be like 10 times or 20 times the size. Which is not necessarily bad. I mean, it hurts during the moment, but you basically you get also evaluated to a higher level, kind of, right? So you live up to that. So, and therefore it's fine. But I think overall the level of diligence, also like the number of reference calls they and other investors want to have, etc., all of which is fair. But when I talk to other or existing investors, they were like, no, reference calls, only post term sheet, etc., and all of this got much more diligent, I would say.
Cool. How many investors did you talk to during that Series A, and why did you pick Insight?
I think we talked to definitely north of 50. Not 100. I actually don't know the number exactly, but something like that. So, and I also don't know, because when we had like we still had quite some in the process when we signed Insight, because we were super happy with them being like super experienced in the SaaS space, especially, and also like we also aim for a US investor because we are basically aiming for the US market with our business that we have. So they were more in the process. But yeah, that's roughly the number we talked to. And yeah, we decided for Insight because like I think one is personal fit. So they are also it's like a personal match, but they're also like very rational people, very, very numbers driven, similar to us. And then the experience, I think, is also important.
Got it. Interesting. Did you have any? I think it's interesting that you want a U.S. investor. I think we'll touch on that a little bit more, but did you have any maybe German investors that maybe offered better terms, but you chose the U.S. investor just to kind of have that logo, or yeah? I
mean, actually, yes, right. So this is like not like extremely better, but somewhat better. But I think like for us, it's like, and especially in times like that, I'm not optimizing the valuation of the company right now. I'm optimizing the valuation of the company in 8 years and in 10 years. So like, sure. I mean, it's obvious, but you have to remind yourself to do that, and that is the rationale.
Yeah, good. How do I ask this? I think you're the first German company we've had on the show. So what is like a two-part question. You can combine your answers if you choose, but what's unique or different about raising money in Germany in particular, and what advice would you have for German entrepreneurs maybe that are 2 years, 3 years behind you in their career path? Yeah.
Yeah, interesting question. So I think it might be somewhat counterintuitive, and again, this is obviously my subjective opinion. But I mean, you could think like Germany with this like historical heritage of have all those engineering companies, etc., that we have a lot of deep tech, etc. companies. But I think especially the German startup scene has been, and I think it's shifting a bit, but has been very dominated by e-commerce copycat businesses. So this has been like the dominating move in the I think in the early 2000s and almost until now. I think now there are more and more really deep tech, also engineering, but SaaS, but really deep tech companies arising, which I personally like, but doesn't matter basically. But the ecosystem is very e-commerce B2C driven. So what this means is also that the VCs are, and again, this is shifting, but I think also the VCs are relatively e-commerce B2C driven. And it's always difficult to then like discuss your business, which might be very different from what they have in a portfolio or have ever seen, right? So so they are, I mean, obviously, I mean, in the end, they are smart people, and but you're kind of biased to look to those B2C metrics in marketing, etc., cohorts and all of that. But if you're selling to large enterprises and you're early stage startups, so cohorts make basically no sense. So you have so few data points that you have to focus on different things. And it's, I think what I said initially in this meeting in Paris, where you like kind of there was just no fit. It's especially, I would say I could recommend more towards a founder who's founding also a company who does something completely new, original, and not copying something. It's really worth taking the time to try to find an investor who understands you, who really understands the business, and not being distracted too much by too many investors who not, obviously, like always, most of the investors say no, but who like just also like point you in a completely wrong direction. So, I mean, stuff I heard during the pre-seed round, if we would have done that, that would have killed us. So that's...
Sure. Was it like advice that was sort of steering you toward the e-commerce space kind of thing? You know?
I mean, it's not, it's like stuff like payment integration, for example, or yeah, like if in the beginning of, I mean, you're solving a very difficult problem, and until you have solved it, your only focus is solving that extremely difficult problem. And in e-commerce, basically all the problem is execution, right? So you're not solving a deep problem. And if you're trying to make stuff around smooth and having integrations and having partner sales, etc., until you have really solved the difficult problem, you must only focus on that, nothing else. No distraction at all. So, and this is very difficult, different from when you are in a copy and purely operation execution game.
I think hearing what you've just said here and how much of the startup scene in Germany is kind of e-commerce and copycat. I mean, is that kind of a legacy of the Samwer brothers and Rocket Internet that, you know, made a pretty big business copying Uber and Airbnb? I mean, they had a clone business, right? Are they still around? I don't even know what the current story there is, but yeah.
I think they're not that dominating anymore, but definitely yes. I mean, I think they are like they've been at least dominating before we found in 2018. But I think this is kind of the legacy that comes there. But it's like, it's also when you look, I mean, there are definitely cool startups who are doing cool stuff. Like, I don't know, Celonis, you might know, it's like one of the biggest, it's the biggest German startup. But still there's like, there's a lot of those copycat style. And I mean, it's already a problem basically that you categorize things together in startup, because I kind of have more to do with, I don't know, an industrial firm than with someone who delivers food, right? So I have literally, even though they are both startups, but I have nothing to do with them.
Sure.
So there is no similarity at all in nothing, basically. And just comparing there, and if you have this like overwhelming maturity in a space where you have nothing to do with and you're always put in the same bucket, that might be somewhat distracting. So you really have to try to find out who is similar to me and what have they done, and what people have done, they're not similar to you at all. You can totally ignore it. So it has nothing to do with you.
And just for anyone who maybe doesn't know what I was just referencing there, and I'm looking at it now. It was a company called Rocket Internet. They were founded in 2007 in Germany by these two brothers, Samwer brothers, and they basically were cloning every hit startup from the US, like Amazon, Uber, Airbnb, Delivery Hero, all the stuff. And just to put an end cap on this, I'm now seeing here they delisted from the stock exchange in 2020, I think. So I guess their Rocket Internet's kind of
I think you don't have to worry about them. So I think they're doing pretty well. And I think it was a super smart move, delisting. But here I'm not an expert. I think they're super smart business people, and they're super good like executors in that space where they are. But this is basically, and that's what I try to say, that's basically not our game. Of course, we also have to execute well, and you have to have some business sense in the stuff you do. But our key problem is to solve a difficult problem. So this is the key thing. So this is more important than anything else, and therefore you have to focus on that. And that's what I try to say.
No, I like that. Until you've solved the difficult problems, stay focused on that. I like it. Any other just even more generic advice for German entrepreneurs? Obviously Germany is a extremely powerful economy, but I don't hear in my own ears much about German founders. So I feel like I don't know much about the German startup world. Yeah. Any other just general advice you'd like to give, or have we covered it?
I think one thing is that I find it not too difficult to talk to US investors. So I think there's basically, and in some way I found it even easier for the reason I said in the beginning, because if you have bigger funds, they are more open to think first principles. They also have seen like more similar businesses than yours, especially if you're like founding something where there are not too many startups in the field. So I wouldn't say like region of the investor should be on your short list where you look for an investor as a German startup. Just look in the US, and I think then perhaps this is somewhat like too much of a stereotype, but I think in Germany it's the culture is much more like, okay, yeah, perhaps you can have like, I don't know, a 300 million exit or something like that. And it's less of like really painting the big picture if you believe in it, right? So it's like that if you're really, and I think there are some startups which have the potential to really build a dominating company if they come through, to really pitch that. I mean, really show how big this can really be. So that would be my two things.
Yeah, that's good. I mean, that's good. I like it. Any advice this is another question I'd like to ask people. Any advice you would give your younger self if you could rewind the clock 3 years? Anything you would kind of advise yourself to do differently or not?
Yeah. I mean, it's always, if you could just give generic advice, I mean, not concrete things. One thing is I would spend more times to like familiarize yourself with the technical stuff. I mean, when you start out, you think like every week counts, but it's not like that, especially if you solve something difficult. So I would have spent more time really immerse myself into technology, and like I have no strong coding background, just a little bit of scripting, but I would immerse myself much more there, and then really look very precisely for for advice, connections, whom you can ask, and also be more offensive about it, because I found
Or what? Say again?
be more offensive or more outgoing about it.
Mm-hmm.
Because I find if you like, if what you say makes sense, then basically everyone is talking to you, right? So if you have like a reasonable approach and you ask someone who's like 5 or 10 years further than you, I think like there's a lot of helpfulness to help, and I think pick very precisely whom you ask what, and then just ask.
Do you think Germans, this is totally generalizing, stereotyping, do you think Germans are a little too reserved, and do they need to sort of dial up their outgoing
100%.
personality to be able to raise money? Do they have to shift their personality a little bit? I don't know.
Yeah, it's a huge thing. Yeah. Germans are very reserved. I mean, especially like, I think it's also somewhat of a misconception, because in Germany you always think like you're very American, kind of, because like the US dominates the pop culture so much. So you basically you feel like it. But it's a huge difference, because like early on we had that US American developer, and already he like the way he talked about the solution, the way he presented it, this was much more outgoing. He was like a developer, right? So they are thought to be introverts, right? But it's much. I think it's very valid point that Germany is much more on the like conservative side of pitching the ideas.
I'm kind of laughing too, because we hired a Norwegian guy recently, and he's already very outgoing, but like I've often say, as you're doing sales and marketing, like put on your American baseball cap and, kind of become a little American while he's pitching. It's fun. It's fun to watch. He does it. Yeah.
Pretty cool. Yeah. But that's definitely, that's an important thing, I would say, especially in the business.
Yeah. Almost done here. I won't keep you too much longer. You mentioned kind of how the due diligence process was very rigorous. Any tips for entrepreneurs to prepare for due diligence or to get through due diligence better, faster, with less stress? What advice do you have around that?
I mean, it's basically it's very much basics, right? So it's like, do what you know you need to do, right? So I don't have, everyone knows what they need to do. They have to have their business plan clean. They have to have like their assumption based on numbers, ideally, or at least like the defendable assumptions, and all of that stuff. And then it's basically just doing what everyone already knows you should do, but you always avoid to do. And that's extremely important, because like in the fundraise, like if you're in the fight, it's like it's worth so much if you can just take something out of the box and here it is. It's beautiful, except that you have to produce it overnight. So
yeah. Okay, last question. Are you already thinking towards the next round and doing any preparation or work towards that round, or are you just sort of enjoying your current Series A?
I'm sorry for that.
It's quite all right.
No, actually we are basically in execution mode. We know more or less what we need to build, and we are building it, and then we are looking for the next fundraising round. Yeah.
Fair enough. Okay, great. This is excellent. If people want to learn more, it's Buynomics.com, I believe, right? Wasn't it .com?
It's Buynomics.com. Buy like buying, nomics like the logic behind it, or the science behind it, .com.
Cool. Anything you want to promote or plug, or any shout outs, or yeah, fair game.
Yeah, I think big shout outs to our existing investors, which were really, I mean, they are really exceptionally good, which is LaFamiglia and Seedcamp, and also our new investors with Insight. Those are great guys, really strong firm, and I think we have really super dedicated, super smart team here, and that's it.
Cool, great. Dankeschön. Buynomics, Sebastian, thank you for your time, and this is great. Good luck. It sounds like a cool business. I know I struggle with pricing all the time, so it's really cool what you're doing. And we'll catch you after your Series B. See what's going on then. How about that?
Too bad.
Okay.
Thank you so much for having me. Thanks, Nathan. Bye.
Cheers.